But let's get talking to our first corporate that we have lined up on the show. Mr. BhavdeepSingh, the CEO of Fortis Healthcare, now joins in to talk about the company. Mr. Singh, thank you very much for taking the time out. First, wanted to start by asking you about your hospital business. If you look at your Q3 numbers, your Hospital India business was up only around 7 to 8% How is it doing in terms of occupancies at this point as your average revenue per bed?
So good morning, thank you very much. As you've mentioned, our growth is sitting in the high single digits, and it's comparable with the industry rate. If you look at others in the industry, I think that's what we're seeing everywhere. So the days of the healthcare industry growing at 30-40%, I think are probably a thing of the past. I think there's a bit of rationalization taking place of the industry, and we're no different at this stage. With respect to what we see when we look out at the Fortis Healthcare business, we continue to see good growth as we go forward. There's a lot that we're doing from a patient care perspective. There's a great deal that we're doing from a clinical investment perspective, whether it's technology, whether it's equipment. You might have heard recently that we are the first major healthcare provider that's starting to publish clinical outcomes as well. So all of that, while we've grown at a high single digits in this past quarter, we continue as we look forward. We believe that the growth will continue at a high single digits, low double digits, and I think it bears well as we go forward. I think with respect to revenue per occupied bed, we continue to be in the 1.3, 1.4 range. These are good solid numbers. We're seeing growth as we measure ourselves against the industry and as we compare ourselves to our competition. This is driven by, again, good clinical programs. We're doing a great deal of work in the space of transplants. We now operate the largest cardiac transplant center. We're doing a huge amount of renal transplants. Our liver transplant numbers continue to grow, not to mention the other specialties that we've grown as well. And then finally, with respect to your question about occupancy, sitting at 72-73% occupancy, quite honestly, it's a bit higher than the rest of the industry. As we go forward, we certainly see those numbers continue to grow as well. So very promising. The disease burden, unfortunately, continues to be a big challenge for us, but I think we're well positioned to be able to help India becoming a healthier nation.
Okay, that's good to hear, Mr. Singh. You've paid down your debt in the last few years to an extremely comfortable zone. Now, would you have the elbow room to grow inorganically, buy some hospitals or hospital chains, since you have the space to take debt?
You know, our debt is at a manageable level, but you know, as anybody sitting in my chair would tell you, that you keep chipping away at it as low as you can.
Okay.
Because any incurred cost, you certainly want to manage that. Having said that, the growth that we're looking at, we're operating over 4,000 beds. We have the ability in our system today, without adding a single hospital, to actually double our bed size. But you know, I think that organizations like ours, when you think about what's important moving forward, our focus, while we will continue to grow, certainly will double our bed size in the next 4 or 5 years, our focus really is on quality. Our focus is on taking care of patients. There are, as I just mentioned to you, whether the disease burden, whether it's in cancer, whether it's the transplant space I talked about, whether it's cardiac, our focus really is on providing the best possible patient care in all of India. You know, healthcare, we get a rap every once in a while because, you know, the whole of being commercial, but we're a publicly traded company, but more importantly, we're a patient care provider, and that's what our focus is on. So I think the growth story will continue, the revenue numbers will continue to do well, but I got to tell you, I'd love to be sitting here talking to you folks in 6 months, 12 months, and have the headlines be about the great patient care that Fortis is providing.
Okay. In that context, how is FMRI Gao doing in terms of a hospital for you this quarter? And where does your transaction with regards to Religare Health Trust stand? It was something that was announced last quarter.
Yeah, so the transaction that we announced at the end of last quarter will be completed this quarter. This quarter and next quarter, as we go forward, between now and Q1, it will be completed. It's a transaction, it helps us financially from a finance structure perspective. As far as the hospital itself, for anybody who's been in the hospital, this is a globally best-in-class hospital. I mean, the hospital is a phenomenal structure, fantastic from a medical equipment technology perspective, and we have absolutely some of the best doctors in the world operating under the roof of FMRI. So we have between oncology, between neuroscience, between cardiac, between our transplant activity, we have a tremendous center. It's very interesting because just about anybody, when we look at our major partners around the world, they marvel, whether it's Johnson & Johnson, whether it's some of the better hospitals around the world, GE, Philips, all the equipment providers. This is an exceptionally outstanding facility. We have some outstanding doctors. The financial performance of the hospital just gets better and better, and we are looking for an absolutely exceptional year as we go forward in FMRI.
Okay. Mr. Singh, just a quick word with regards to the diagnostic business, because if we saw your last quarter numbers, you managed to normalize your margins, it seems, to 22% versus what was an elevated 28% in Q2. So where do you think things would possibly average at for the diagnostic business, especially in a scenario where you're seeing higher competition come in as well? And what would the stake sale stand at with regards to your private equity investors?
So first, just on the business side, the SRL business is a very strong. We are the leading diagnostic provider in India today, with the number of centers we have, the pickup points that we have around the country. So very strong presence, tremendous brand name, very well respected within the clinical and patient community. I think with respect to the margins, as you rightly said, a little bit of rationalization that took place this past quarter, but we see margins being in the high 20s as we go forward. There's good growth opportunity as we go forward. We did a tremendous job last year in the dengue season. Unfortunately, that continues to be a problem for us, a challenge for us as a nation. We certainly see SRL being there and again helping the country get through that. So we see the numbers continue to grow. We will rationalize from time to time, as you rightly mentioned, whether it's the number of centers or the collection points we have. I think that's what any good business does. But growth-wise, we continue to see good movement going forward. I think with respect to investors, and we have had a couple of private equity investors, there have been some changes in it. But when you look at large organizations like ours, when you look at businesses where you have different investment perspectives in it, I think you have from time to time movement in it. It's very natural. It's what any good company does. I don't think we're any different. But again, no different than Fortis Healthcare. Our focus there, again, is on providing the best possible quality as opposed to anything else.
All right, we'll leave it at that. Thank you very much, Mr. Singh, for joining us with your priorities at Fortis Healthcare. That stock, not much changed in terms of a share price today itself. Market itself is a little under the weather, about 0.5% lower, but well, not much to worry because 7700 is not all that far away from current levels.